Now what we are studying today? We are studying today what is accounting. If somebody is science background, arts background, doesn't have any issue. I am starting like ABCD, what is accounting. Assuming nobody has never studied accounting in life. With that we are starting all debit, credit and everything we will discuss in our classes. So nobody need to take tension you are a science background or any background. I am assuming I need to teach accounting to you from first A for accounting, like that. As I was discussing in the previous class, accounting is a field which is very important in practical world in all over the world. Without accounts, nothing can be done. Nothing can be done means what? If I want to invest in the shares of a company, suppose Reliance Industries, ITC, Tata, TCS, Tisco, Tata Power, any company. If I want to invest in the shares of a company as an investor, I will be looking at their books of accounts, financial statement, PL account, balance sheet, to know their financial condition. That if I will invest my money there, then whether they will be able to give me proper return. Because if I have surplus money, I can deposit in bank. Bank will give me around 6 to 7% interest. So why I will invest my surplus money in securities of a company? In Reliance, ITC, why? Why I will invest? Unless and until I will not get greater than 6 to 7% return. You will see why? Why I want greater return? Because by investing money in bank, the return is secured. But if I will be investing in securities of a company, the return is not secured. Return may be more, may be less. We know this language. Investments are subject to market risk. Read offer related documents carefully before investing. That means even though I am getting information from different persons, from mutual fund, from some knowledgeable person, but if I am investing in a security, my risk. That person is not at risk. That person has advised me, my risk. And I need to take the call by looking at the financials, whether I should invest. Whether the company will be able to give my desired return, then only I will invest. That information I will be getting by looking at the financials of the company, looking at the accounting data of the company. Second, I am going to supply goods and services to an organization. I am concerned whether the organization will be able to pay me in time if I am giving on credit, 15 days, 30 days credit. Whether the organization where I am going to supply my goods and services, whether that organization will pay me, whether they will pay me in time. I will be able to decide about this by looking at their accounts, by looking at their financials. If I am an employee of the company, whether the company will be able to increase my salary, give me bonus, commission, give me better job satisfaction, depends upon their accounts, their financials. Depends upon their accounts, their financials. If I am a financier going to give loan to the company, bankers, any non-banking finance company giving loan to the company, whether the company will be able to pay me interest, whether the company will be able to pay me the principal back, I will be able to analyze from their financials only, from their accounts only. If I am a customer, you all are customers of Saraf Academy. If you are buying classes from me, then your service, whatever service you will be getting from Saraf Academy, depends upon my financial condition. If Saraf Academy financial condition is not good, they will not be able to serve the students. Maybe the live classes will not be conducting. Maybe the recordings you are not able to do properly. There is a problem in the software. We are not able to rectify the software because we don't have money. We don't have financial condition proper. So whenever you are buying goods and services from a company, you are always concerned with after sales service. So you will be able to get after sales service if the financial condition of an organization is good. I will say these are the example which I gave: shareholders, financiers, suppliers, customers, those who are giving loan to the company. Those are to generally direct connection of the company. but there are many, I will say, indirect connection. Suppose my company is located in the 4th floor of this building. In the building, other persons are there. In the tuition center building, there are so many offices are there. In the building, there is a community, there is a society which look after the building maintenance and all that. If my financial condition is not good, I will not be able to contribute to the maintenance of the building of the society. Not possible. So that is also for looking at my financials. I will be able to do philanthropic activities, donation, charity to anybody whenever my financial conditions are good. Even though there are those who are running on the, you can say, outside the building, they are walking from here to there. They are not concerned at any way. But I will be able to contribute to the society if my financial conditions are good. So financial condition, accounting, books, financial statement are actually such an important thing which we can't ignore if we want to do any business. Now the business is not necessarily a profit-oriented organization. There are many charitable society, there are many trusts which are not running their business, government organization, not running their business for profit. They are running the business for actually help to the public. But they will be able to help to the public when their financial condition is good. When their books of accounts, when their financial statements are showing a correct picture, proper picture. Those financial statements will be prepared, will be audited, will be given to the general public by financial accountants. You, me, we all can say we are the financial accountant. A financial accountant not necessarily to be a qualified person. Qualified means in India you have done Indian Chartered Accountancy. In ACCA you have done ACCA, you are the ACCA member. In CIMA you are a Chartered Institute of Management Accounting member, CIMA member. When you have done a professional qualification, that professional body has rigorously tested your knowledge at continuous level. Then they have, you can say, you passed all the exams. They have given you a certificate of membership that you are the member of the institute. Then you are getting the authority that actually you are a professionally qualified person. But that doesn't mean that you can't prepare financial statement without professionally qualified. When you are professionally qualified, you can audit those accounts. Auditor need to be a professional qualified person only. But the preparer of accounts of the financial statement may not be qualified. But if you are qualified, others will accept your knowledge process, others will accept your brand. That you have a degree, you have a professional qualification, you have done huge study in accounting, then whatever you are presenting, doing, that is more or less correct. That is the doubt that it is not giving true and fair view, it is wrong. The question will be coming less if you are professionally qualified. So all over the world, whether in India, whether in UK or any country, auditing can be done relating to the books of accounts, relating to the financial statements by the auditor. And the auditor should be an independent person. And the auditor need to be a professionally qualified person. That means he should be given membership of the professionally qualified institute. Then only he can become the auditor. But there are so many in all over the world working in the accounting and auditing domain without having the professional qualification. They always curse themselves that why they have not the professional qualification. If they would have professional qualification, they would be able to grow in their life. They will be able to provide consultancy, not just by doing job, but they could have done many things. So I mean to say that we are here not in this subject, but ultimately in the ACCA, CIMA or any course that we need to become professional accountant. But to become a professional accountant, we need to start with A. That is accounting. What is accounting? So if you go in technical language, accounting means the accounting system of a business entity, records transactions and summarizes the transaction to report financial performance and position of the entity. It is written accounting system of a business entity is recording transactions, summarizes the transactions to report financial performance and position of the entity. If somebody, this is, you can say, a bookish definition. Whenever you write anything, you can't able to do comma, full stop, same thing, even not required in practical life also. But just what the books define an accounting or accounting system. In Saraf Academy, there are so many transactions every day. There are some students joining the classes. They are paying the money. There are some normal day-to-day expenditures, tea, coffee, or whatever you can say, the general stationery expenditures. Sometimes there is a purchase of assets, computer, laptop, or anything. Sometimes there are some loan taken, loan repayment. Loan taken, loan repayment, computer, laptop, not every day. But there are day-to-day transactions. There are some transactions which are arising in a month, one time, two times, three times, like that. Depending upon the level of the organization, the volume of transactions. In ITC, Reliance Industries, the volume of transaction is far, far larger than Saraf Academy. But Saraf Academy, brand name Saraf Gurukul Private Limited, is a company. And ITC Limited and Reliance Industry is also a company. They are listed company, they are public company, ours is a private company, in which me and my wife is the shareholder. But we also have regularly transactions are there. In our company, there is 2 persons appointed as an accountant on a part-time basis. That means in a month, they come in our office for 10 to 15 days. From morning till the evening, like any staff. They complete all the accounting records regularly so that we can pay income tax, we can pay GST, we can maintain our records properly. So in every organization, the accounting system means recording the transactions. Whatever transactions are arising in the organization, purchase, sale, loan taken, investment, assets purchase, assets sold, whatever, those are all transactions, they need to be recorded. The books of accounts are very detailed. Like in my case, if you go in the tuition fees ledger, there are so many thousand students have made payment in last 1 year. So that's a big detail. Accounting records are very detailed, very voluminous. Around 10-15 years back, it was in physical form. But now even the smallest business is making books of accounts in computer, in accounting system, Tally, or whatever their SAP system, SAP system, ERP system. But the accounting records all the transactions regularly on daily basis. And then when the transactions are recorded, they are summarized. They are summarized into 5 parts: assets, liability, income, expenditure, and equity. Assets, by which we are doing our business, by which we are able to generate our income. This computer, laptop, camera, land, building, furniture are all assets. Liability, I need to pay some money for settling my obligations. If I purchase this computer on credit, I need to pay that liability. If I have taken loan from bank, that is a liability. If the staff salary is not yet paid, that is a liability. So liability, assets, liability, which we say as position. Position means statement of financial position. SOFP. Statement of financial position means balance sheet. In Indian language, balance sheet. In IFRS language, statement of financial position. So that statement of financial position give you summary of all the assets and all the liabilities. Now when we go into detail, assets are categorized into 2 parts. Non-current assets, current assets. Liabilities are categorized into 3 parts. Equity, non-current, current liabilities. That summarization is also further summarized. But the summary of all the assets and liability is in the balance sheet. And the summary of all the expenditures and incomes are in the profit and loss account or financial performance. Suppose in Saraf Academy, the total tuition fees collected in 1 year. So that is the sales revenue minus the cost of goods sold. That is for giving classes, internet, software, all which are directly engaged with the giving classes. Then comes administration expenditure, accountant salary, office admin salary, office rent, administration, selling. Suppose for attracting students, there is some marketing, there is some Google AdWords, there is some SEO, so many things. That is marketing, selling. So we say that in the PL account, in the financial performance, we record sales performance, sales revenue, minus the cost of goods sold, gross profit, minus selling and administration expenditures, net income. That means, first of all, the transactions are recorded regularly, every day, many times, and then at the end of a period, they are summarized. The summary is presented to the general, whole public, shareholders and all that, to analyze the financials of the company. That summary is assets, liability, balance sheet, and that summary is income and expenditure, the company's profit and loss summary. In a company, maybe there are millions of transactions, but the summary will be this only. In Saraf Academy, summary is PL account, balance sheet. In Reliance Industries, summary is PL account, balance sheet. In any company where you all are working or will be working, the summary is PL and balance sheet. This is called accounting. Accounting is recording the transactions and then producing the summary of those transactions in the form of financial position, which is balance sheet, and in the form of financial performance, which is income statement. Why we require and how we can do this? Obviously, for recording transactions, we need to understand each and every transaction, how they can be accounted for, how they can be recorded. If we don't understand how we can record, then the summary will be wrong. It is totally wrong. If we don't know how every transaction, whatever type of transaction happens in a business, maybe in Saraf Academy, maybe in Reliance, maybe in Google, maybe in Microsoft, anywhere, whatever transactions are happening, how they can be accounted for. What will be the system? What will be the method? What will be the procedure to record those transactions? That we need to study. How many classes? Till the time we complete ACCA. Not only in this batch in coming 3 months, but in further batches in higher level, next higher level, because that you never stop. Even once you complete, you become professionally qualified. Then also there will be new things coming in the market. So you need to always upgrade your knowledge relating to recording of the transactions. If suppose you say that you know how to record the transactions, then also preparation of summary is an art. Questioning that this summary is not correct, this should be presented in this way, that is also an art, that is also a science, that is also a type of knowledge. Normally the higher level person focus on the summary and the junior level persons focus on recording transactions. You will say that, sir, tab to hum log ko ye seekhna hai summary. But how can you become senior when you don't become junior? Jab aap normally base you don't understand, how can you think that you will be able to understand the summary and you will be able to analyze the summary very fast? Impossible. Pehle shuru se chalu karna hoga. You need to start from the basement. So if you ask me personally, in our this subject, financial accounting, we are not going to study summary. Padenge, very lower level. The summary of the transaction summary, we are going to study in next level. When we go to the next level, the recordings will be there, but the summary will enhance more and more. And when you go to the highest level, third level, then only summary will be there, because now at the final level we understand recording you already know. So you need to teach summary more and more. So it's a process. Not that today or in 1 or 2 classes we can understand this. But what is accounting? Accounting is a system to record all the transactions in the organization, and then at the end of the period, generally at the end of a year, producing the summary. The summary of the transactions is financial performance, PL account, profit loss, and the summary of the transaction is position of the entity, which we can say as balance sheet. So accounting consists of 2 elements. If anybody will ask you what is accounting, there are 2 parts. Recording of transaction, summarizing the transaction. Recording of transaction must be recorded as they occur in order to provide up-to-date information. Summarizing the transactions for a period in order to provide information about the entities financial performance and financial position. To whom? To the interested parties. Once we bring summary, the summary is not only financial position and PL. It is these also. Changes in equity, cash flow and statement of finance, notes to accounts. Anybody knows what is statement of changes in equity? Anybody knows what is statement of changes in equity? I have not taught, I will teach. But just as a general knowledge, anybody knows? Anam, Assis, Columbus. Anybody knows what is capital? Capital पता है क्या होता है? Do we know capital? What is capital? What is capital? आप बुकिश डिफिनेशन नहीं बोलेंगे, आप जो समझते हैं वो बोलेंगे. कैपिटल, व्हाट इज कैपिटल? And it is not required later. Capital is required at the start of the business. That means after that it is not required. In a business, whatever money contributed by the owners is called capital. In a sole proprietorship, the sole proprietor. In a partnership, the partners. In a company, the shareholder. Amount contributed in a business initially, later, liquid, whatever, by the owners of the business is called capital. In individual business, sole proprietorship, partnership, we use the word capital. In company, we use the word equity. Capital ke badle we use the word equity. It is owners, those who are the owner of the business, whatever money contributed by them in the business initially, later, whatever, that is called capital. In a company, it is called equity. So in my company, Saraf Gurukul Private Limited, brand name Saraf Academy, me and my wife has contributed capital. We have both of them 5,000 shares of the company. That means 10,000 shares. And each share is valued 10 rupees. I am saying facts. I am not making a story. So I have given to Saraf Academy 5,000 into 10, 50,000. And my wife has given to Saraf Academy 5,000 into 10, 50,000. This is the share capital in Saraf Academy. Equity in Saraf Academy. But Saraf Academy established as a legal entity, I don't remember exactly, around 2006 or 7. That means around 13, 14 years back. When we established the company, we introduced our capital. Later on, every year Saraf Academy is earning income by providing training classes, tuition fees, minus expenditure, income is there. That income is there, is still in the company. That income not taken by the owner Prakash and Vidisha Saraf. That is still there in the company. That is also capital. The capital is not that what you need to contribute. Whatever you contribute, that is a capital. But whatever earnings by the business, if that is not taken by the owners, that is also capital. Like we have done, those who have studied accounts, individual level of accounts, sole proprietorship, opening capital plus profit minus drawings, closing capital. Why we say this? Because opening capital, whatever you have contributed in the business at the beginning, whatever the profit generated by the business not taken by the proprietor is also the capital. Out of that there is some drawings. So that is reducing your capital, so becomes closing capital. Similarly, in case of company, shareholders are not allowed to do drawings. Drawings not allowed. But in a company, the shareholders can go for dividend. Whatever the company will earn as a profit, the company will give dividend out of that. In a sole proprietorship, partnership, we say drawings. But in company, we say dividend. So in a company, what is capital? Initial capital which is introduced by the shareholders, further profit generated by the company, minus the drawings given to the shareholders. That is called capital or equity. In the equity, there are other things also, which we will discuss later. Many times when I say many things, because if I start saying that, then we will deviate from what we need to study. Because every single point has entire sea. So for that reason, we need to be focused what we are studying. Statement of profit or loss, income expenditure. Statement of financial position, assets, liability, balance sheet. Statement of changes in equity means the shareholders, the owners' money in the business. Share capital, profit minus drawings. Statement of cash flow. For Saraf Academy, cash flow is not required. Cash flow is required only for listed company. Suppose in a company, ITC Limited, profit in a year $1,000 million. Can we say that cash and bank balance is also $1,000 million? If in a company, profit is $1,000 million, can we say that the cash and bank balance is also $1,000 million? Because profit is 1,000, so cash should be 1,000. Can we say? If in a company, big company, not Saraf Academy, profit in a year 21-22, 1st April 21 to 31st March 2022, profit is $1,000 million. But the cash balance will also be $1,000 million or not? Profit is equal to cash or not? Why no? What is the reason that the profit is not equal to cash? What is the reason that the profit is not equal to cash and bank balance? What is the logical reason? फटाफट बोलिए भाई. While calculating profit, we deduct many non-cash expenditures. Say depreciation. By deducting depreciation, your profit is increasing because you are deducting depreciation. But because of depreciation, you are not getting cash. I purchased this computer. I am not deducting computer cost as an expense. But on computer, I will deduct depreciation in calculating income. So that will increase my income. Because expenditure recorded income will be more. But that is not increasing my cash balance. If I am taking loan is not income. But that will increase my cash balance. So there are millions of transactions, I will say, millions, which are recorded in PL account, income statement, not recorded in cash. Which are recorded in cash, but not recorded in income statement. So, listed company, big companies are required to prepare cash flow separately. Along with the PL account, they need to prepare cash flow separately. They need to record how much cash balance in the beginning, how much cash inflows they got, where they have expended the cash, they need to show. Why? Because a business can survive by suffering losses, but a business cannot survive a single day without cash. A business can run the show 1 year, 2 years, even though they are suffering losses. But a business cannot run the show for 1 single day if they don't have cash. बगैर पैसा जीवन में कुछ नहीं होएगा. We understand that money is not everything, but we need to understand business cannot run without money. So it is very important that a business should have money so that they can run. So for shareholders, investors, financiers, suppliers, cash flow statement is very essential to analyze the growth of a company, to analyze the condition of a company. So listed companies are required to prepare cash flow statement. All these we will prepare at least after 10 classes. PL account, balance sheet, statement. Abhi nahi bana rahe. Because when you start preparing that, that means mota-moti recording of transactions you have understood. Because once you complete recording of transactions, then only to you can go in summary na. If you don't know how to record the transaction, how can we make a summary? This is the summary, which we say that the summarized information is then presented in the form of finance. What is a financial statement? Financial statement is the summarized presentation of all the elements of the organization, assets, liability, income, expenditure in the form of PL account, balance sheet and other statement. That is called financial statement. This is financial accounting. And this is financial statement. The financial statement includes the summarized form of all assets, liability, income, expenditure, cash flow. Notes to accounts. Just by looking at the PL account balance sheet, you will not be able to understand everything. Even though you are a professionally qualified, you will not be able. I cannot understand. How you will understand? For that, the organization need to give detail after the PL account balance sheet, which is called notes to accounts. Those detail when we read, Then only we will understand why the profit is more, why the losses are more, why the assets are more, whatever we need to understand. We cannot understand without getting information, notes relating to important items. So that notes to financial statements. So we can say that what are the elements of financial statements? PL account, balance sheet, statement of changes in equity, cash flow, and notes to financial statements. We are studying this subject, which is financial accounting. And after 3.5 months, we will be studying management accounting. The two subjects, FA, MA. And we completed in last 3 months, BT, business technology. These are the 3 subjects at lowest level. Similarly in CIMA, F1, financial accounting, P1, management accounting, E1, business technology. बात जो भी है, कोई नाम जो भी बोल लें, the same thing. What is the difference between financial accounting and management accounting? We are studying this here. We will study again in management accounting, because there also the key distinction between financial accounting and management accounting summarized as follows. Financial accounting is production of summarized financial statement for external users. Financial accounting is production of summarized financial statement for users. Summarized financial statement, financial position, financial performance, cash flow, statement of changes in equity, notes to accounts. Financial accounting is production of summarized financial statement for external users. That is financial accounting. What is accounting? Accounting is a system of recording transactions and then summarizing those transactions in the form of PL balance sheet. What is financial accounting? Financial accounting is only the summary part. Financial accounting is the production of summarized financial statement for external users. It is usually prepared annually. Usually, why not always annually? Suppose a company is closing their business in a year after 6 months. So it will be prepared after 6 months. So usually it is prepared after 1 year. Sometimes suppose a company suffered a loss by theft or fire. Their books of accounts, assets and all get destroyed. So they are not able to prepare their accounts in 12 months. They are preparing 14 months, 15 months later. So usually 1 year, but sometimes exceptional circumstance, maybe not exactly 1 year. Generally required by law. In India, company law, even for Saraf Academy also, because we are a company. Even by company law, even by income tax department, law require that you need to prepare your financial statement. Reflects past performance. The financial statements, the financial accounting will always give information about past, not about future. Information calculated and presented in accordance with international accounting standards. In India, information calculated and presented in accordance with Indian accounting standards, IAS. In US, information calculated and presented in accordance with US GAAP. Since we are discussing global accounting, IFRS, international accounting standards. In Indian accounting standards and international accounting standard, differences are very, very small. Don't take tension that if you are studying international accounting, then Indian accounting to you don't know. It is 99.5% same. Whatever the differences are there, generally we are not going to discuss in these classes. For that we need to increase our level. Wherever it is possible, I will discuss, but not possible in this batch at lower level to discuss the differences. Management accounting, production of detailed. This is a summary. This is detailed. Used by management to control the business and plan for future. So, management accounting information are more detailed. They are also summary, but they are more detailed and they are used by the management. Management means the company's board of directors, the company's managerial level person. They use those detailed information to take business decisions. What business decision? Where we should invest further money. Whether we should continue this business. Whether we should be selling our product in this market. What new product we will be launching. How can we control the cost? There are endless information. Those things, those business decisions are taken based on this management accounting information. Normally prepared monthly, maybe quarterly, maybe fortnightly, but normally the organizations in the world, management accounting information they are preparing monthly basis. Rolling matlab continuously, never stop. Non-mandatory, this is mandatory. Generally required by law, this is not mandatory. Includes budgets, forecast, activities as well as reflecting past. The financial accounting focus only past. But management accounting, past, present, future. Bhutkal, Vartaman Kal and what do you say? Bhavishya sab kuch. Because that is for decision making. Only by looking at past, we can't take decision for futures. Need to see competitors, need to see what is happening now. Information prepared and presented in order to be relevant to managers. There is no fixed format. Here there is a fixed format. You need to follow IFRS, IAS, whatever. But here there is no format. The way you require, the way you design, you will prepare, but ultimately they will fulfill the purpose of management. Because otherwise there is no purpose of preparing financial statement. उसको बनाने का फिर कोई फायदा नहीं है. Financial accounting is a summary of financial statements. Financial statement means financial position, balance sheet, financial performance, PL, statement of cash flow, statement of changes in equity, and notes to accounts. Is prepared annually, is required by law, generally reflect past performance, and it follows, it prepared based on international accounting standard. In different countries, they are known standards. Management accounting, no standard. Management accounting is more detailed. Prepare for the management to take decisions. Normally prepared more regular basis, may not be monthly, maybe quarterly, not mandatory, but includes past information. Here only past, here past, present, future, all. And the information prepared, there is no fixed format. It will be prepared so that it can fulfill the decision making purpose of the managers. That is management accounting. In short, we can say the difference between financial accounting and management accounting.